On Monday, 212,850 contracts. That's over 1.2 billion ounces. That's 1.5 times what is mined in a year globally in the industry. Was dumped onto the market at the open.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, broadcasting live from downtown in Austin, Texas today. Quite nice to see this part of the country having quite a good time here, especially an area with interesting gold and silver history, which, to get settled in, going to start exploring. Fortunately, joining me on the show today is Andy Schectman of Miles Franklin, who I'm guessing probably knows some interesting gold and silver folks here in Texas. Of course, I've already seen Rob Keens of Gold Silver Pros about a week or so ago, Silver Bill Murphy, Scott Craig of the Silver Independent. And Andy, do you have, as you join us, first of all, how are you, sir?
I'm doing great, Chris. It's good to be back with you. Yeah, absolutely. One of my best friends and smartest guys I know, crazy Billy Holter, lives in Texas and not too far from where you are.
Well, there you go. It's nice to hear Billy's down here, and interesting as I will report back as I learn more about people's thoughts on gold and silver in this area. Have noticed, especially when I came to visit you and then going to see my mom in New Jersey for a bit, just seeing the different ways people approach things in these different states. And of course, I mean, obviously you see it interesting while the election's going on. And now what I know people really want to hear is that, especially in a week where I think, what was it, $2 almost in silver, somewhere around $80 in gold on Monday. I'm getting my days right there, where the prices just dropped, fell off a cliff. So Andy, what are the customers saying? What are they doing? What should people be aware of?
Well, first of all, we got to talk about, and I'm going to try. I don't know. I hope I don't go on a rant, Chris. You know, I've been accused of doing that once in a while. I'm going to try not to. But I'd like to. I do want to rant a little bit. Let me rant just a little bit. And you know, it centers around the book that you were so kind to give me, The Art of War, for which has been very important to me for many years. And I've taken so much away from this book, The Art of War, and it's so pervasive in terms of its tentacles throughout the elite, throughout military. It's mandatory reading at West Point and CIA. It's taught in most major business schools and most major law schools. It's taught to most Japanese business executives, the whole premise being really misdirection. And when we look at what happened on Monday, even though JP Morgan supposedly is sitting on the sidelines, it doesn't mean that the market wasn't ridiculously manipulated, misdirected, as I think what I'm getting at really portrays, is that the fundamentals were cast aside. As a country, we mine roughly 800 million ounces, or as an industry, the whole silver industry, I should say, mines about 800 million ounces of silver per year. On Monday, 212,850 contracts. That's over 1.2 billion ounces. That's 1.5 times what is mined in a year globally in the industry. Was dumped onto the market at the open. My question is, where the hell are the regulators? The fundamentals are so bullish for gold and for silver, but when we look at a market that is so thin like silver, and 1.5 times global mine production is dumped onto the market at the open, it's specifically a drive-by shooting to create an effect, to misdirect the public. Oh, there's a vaccine. Everything's going to be great. So let's dump silver below the 50-day moving average. It took 1.2 billion ounces of silver to drive the price down below the 50-day moving average. Why the 50-day moving average? Because it's more misdirection. Most of the world runs upon, the financial world runs upon technical analysis. And so if you drive the price down, heaven forbid, fundamentals be damned, but if you drive the price down below the 50-day moving average, it creates a snowball effect where all the algorithmic black box trading programs that run Wall Street and their hedge funds start selling to drive the price down and down and down. So anyways, the bottom line is simply this, Chris. The fundamentals in terms of the demand physically are off the charts. You had Andrew Maguire on your show not too long ago saying the Chinese are buying up all the physical from the Swiss refineries. And in this industry, the majority of all the sales we've done this year, which has been for every precious metals company, volume like they've never experienced, majority of every single order has silver in it or is comprised entirely of silver. So the demand physically, the demand on a very large scale, and I would argue very shortly the industrial demand where silver is needed for so many things, including, from simple light switches to electric vehicles. The need is insatiable and ever growing. And if they don't wake up and start to secure large amounts, game's over. Let alone, let's not even, bring into the discussion the others category on the COMEX who are standing for massive delivery and pulling all the silver off the exchange. We are heading into, I believe, a very silver-friendly time, Chris. So thanks for letting me rant. I appreciate it. I feel a little bit better now.
Well, yeah, that's what we're here for on the Silver Talk Therapy Hotline. Call on in, Silver Bugs, and give me your story. Tell me your pain. Maybe this is what being a Jets fan has prepared me for as we went 0-9 this week. Although, Andy, I'll say that I feel like it's bringing me a step closer to owning the team. If I may throw my own little tangent in here in a moment, I used to be joking when I said that, although the other day I was thinking about how things went with the big Silver Short book and especially that format. And so then I was thinking, what if I did that, about how the Jets could win and talk with Joe Namath, and other relevant figures, Wayne Cribbett, some of the reporters or some of the people who really get the tradition. So anyway, we're going to have some fun with these things as we go along. But back to silver. I mean, I get what you're saying, and it's interesting. You also mentioned Andrew Maguire. By the time we're recording this, you've not yet heard what Andrew Maguire said this month, which I thought was even quite – usually what he says is pretty fascinating. What he said this month, and we'll link to that at the end, but – yeah, I mean, and then on top of it, you have the whole election situation now, and I got comments the other day. People are upset in my title. I said Biden declared president. I mean, I've seen NBC and Associated Press have said he's president. I don't know if that makes it official. I hear a lot of people reporting other things. So I just wonder, what is the impact of that on how people are planning and anything related to silver? If Biden is the next president, whether it's tax or any of the policies, how that whole situation might affect the silver market?
Well, I think a lot of it has to do, I guess, with the contested Senate seat, is it, in Georgia, I believe? I mean, if he does win and Kamala Harris is the swing vote, then all of this comes into play in the respect that, his Green New Deal, I think he'd have a hard time passing that through the Senate unless they have a sweep of both the House and the Senate. And if that is the case, then yeah, I think you look for $40, $50 silver in a blink of an eye, if not higher. When you realize the fact that we are in a 200 million ounce deficit each year right now between demand and mine supply, and we are entering a period of time where potentially if he wins and sweeps and is able to push his agenda along, then yeah, you could see the industrial. See, this is the unique thing about silver, Chris, is that, as we talked about last week, it's a metal that's bracketed on both sides. On one side, you have copper, which is purely industrial, and gold, which is almost exclusively monetary or investment. And silver has such a rich history as a monetary metal, maybe even longer than gold in terms of being money. But it is also a massively important industrial metal, especially in a world that's becoming more and more digital. And if Biden has his way, green, which would massively, I think, tweak the industrials into securing supply into a market that is already trading at a big deficit each year. And so, yeah, at some point you have to just, gobble up all the supply. As Keith Neumeyer was saying the other day, the Apple treasury, just the treasury at Apple, has enough money to buy up all the whole silver industry a few times over. I mean, he just said that on an interview I heard the other day. So if you are a company like Apple or Samsung or any of these companies that you need silver to build your product, period, no debate about it, at what point do you just say, screw it, and jump in? That's what Ford Motor Company did with palladium about a decade or more ago already, when there was a shift, I believe, from platinum to palladium in catalytics because platinum was becoming too expensive. So they took a very large stake in the futures market and the price shot up. So at some point, securing supply in a deficit-laden environment that will become more and more thinly available because of not only investment demand, like Andrew was saying, the Chinese buying up all the bars in Zurich, but also from the industrial side. So, it's a very crazy time, Chris. And if that happens, I look for silver to outperform in a very, very big way. At least logic in my mind would dictate.
Yeah, and I'll give you a little teaser what Andrew talked about. He said basically there's an entity out there that even with current premiums is saying basically they're taking anything regardless of the premium, which, if depending on how that plays out, again, at Silverfest, Ted Butler talked about how he sees all that inventory on the COMEX as a sign of activity of something unusual with industrial users. Again, when is the final spark? When do things change? Although, just one thought I've had last couple of days, and I understand the politics is a sensitive area, so not trying to get people riled up about that, but just to the degree that I think that there are a lot of people that, especially the people who buy silver, that if Biden is the next president, are going to be pulling their wealth out of stock market, out of traditional assets. And that, it's like when you hear, again, I don't know. I mean, we never know what a president's tax policy, Democrat or Republican, is going to be till they're actually there, because both sides say one thing when they're running, do the other when they get in. But I mean, I'm not, again, trying to take sides, but just from the conversations I have with people who are running companies, who are investing large amounts of money, they express concern, should Biden be the president? Any thoughts on that? Are you hearing the same thing?
Well, yeah, I mean, look, Biden's policies center around higher taxes, both corporate and capital gains. They also center around taxing of stock transfers. These types of taxations on Wall Street and on investments is not Wall Street friendly. So, yeah, I think you could see in an environment where taxes are guaranteed to go higher. I mean, at least he's already ran under that platform that's what he's going to do, including capital gains and the like. So if even the most ardent, Chris, I would argue, even the most ardent stock bulls have to realize there's a disconnection right now between Main Street and Wall Street. I mean, how the hell could you not? You drive downtown Minneapolis, it's 8% occupancy. It's like Escape from New York. It's frightening. I mean, I've never seen anything like it. I've been here my whole life. There is a massive disconnection. The stock market is supposed to be a reflection of the economy. And I don't know, can anyone really honestly say that this economy is being reflected accurately by the performance of the stock market? And so I think even people who wouldn't know a gold coin or want one if it fell on their foot. They would rather trade it for a share of Apple. And okay, cool. They've been, it's been a good gig for a long time, but I think that even those people would realize that, hey man, something's going on. So at what point do they not just say, hey, there's a disconnect, we're probably going into another lockdown, the market's at its all-time high, they're going to raise taxes for sure, it's going to cost me more money to get out, why not get out while the getting's good? So yeah, I do think that is a high probability if indeed that happens, and maybe it's already been to some degree priced into the market, some of the downward trajectory we saw, and of course it shoots right back up. But I don't know, Chris. Yeah, I would think logic certainly would dictate that would happen because taxes are going to go higher, the market's at all-time highs, and it's not justifiable. At some point, it has to fall to some form of a normal price. But one last thing about that too, Chris. And I mean, if you look at the market in general, most of it isn't doing so well. It's being dominated by a half a dozen or so stocks that are so heavily weighted that the indices are going to the moon. So, I don't know how many people are invested anymore in stocks like mom and pop. I think certainly the hedge funds that are controlling things are heavily weighted in this area. But yeah, if taxes go higher at some point, there's going to have to be some profit taking. If not, they're just, I think it's kind of the greater fool theory, waiting for the price to go higher and fundamentals be damned.
Well, I hear you. And you mentioned probabilities in there, subject which I'm quite fond of. Don't worry, I won't geek out on Bayes' theorem again today, or actually maybe I will. I promise nothing. But Andy, let's think about it like this, if you will indulge me. So there's probability A that you and I are completely wrong. And everybody that I bring on the show, everybody's talking about silver, which I think is a pretty decent roster right there. But there's some probability that we're just completely wrong and silver is not undervalued and the paper leverage isn't affecting anything. So we'll call that probability A, okay?
Okay.
Now, B, the probability B, let's say that we're correct. And I guess the best thing about conditional probabilities is that, anyone can insert, it's just basic math. Anyone can insert, maybe they think we're 50% right or 50% wrong. I don't know. In my mind, at least for my trading purposes, I think it's dangerous to think you can't have a blind spot, but gee, I sure feel like both of us and many others have done some thorough thinking, trying to exhaust if there's anything we could be missing. So whatever those percentages are, there's category B where we're correct. And let's just go along those lines for a moment here. So if we're correct, and the reason the price is below not only the 2011 high or the 1980 high is primarily because the price gets carpet bombed by massive volume spikes, which analyst after analyst, including Bart Chilton, former commissioner who presided over the silver manipulation investigation by the CFTC, also talked about. So if that is accurate, my thinking would be that, while certainly I know people are frustrated and they're like, is it ever going to end? But if it requires paper to stuff the market lower, then in one sense, the longer this goes on, or the lower the price goes, or the more you delay it, the more you would coil the spring, I would think. So does that sound about right? Because it's like, there's a possibility that it's just we're wrong. But I would say that if in the probability when you're right, when you really think through that situation, especially depending on what degree of accuracy, maybe we're going to get 95% or 90% right. But it seems like if that is the case, and when you look at what's happening and then you hear some of the things that folks are reporting, I don't know, I think that's why people are turning to silver.
Well, here's the deal. Here's what I think, and I think you're right. I think we are closer to being right than we are to not. And I mean, I think it's a journey that you have to go back a little bit. Here again, I have a little bit of a rant that you have to look at it, I think, from this perspective. Now, again, who am I? I may not be right either. I have spent a lot of time trying to figure this out for many years. And I think it goes back, it goes way back further to the London gold pool and all the reasons to keep gold down. But from my time frame, from my perspective, you go back and look at the term Gibson's paradox, the inverse relationship between real interest rates and precious metals. All of the manipulation, and we want to talk about manipulation, to me, it should only center around one place, and it's interest rates. Everything is manipulated around interest rates to create an illusion of wealth. The term Gibson's paradox says if you have super low interest rates, you should have very high gold and silver prices, because, the theory is, well, gold and silver don't pay any interest. So if you have 7, 8, 10% interest, you could buy treasury bonds with a degree of safety, and double your money every 7 to 10 years. And so with interest rates,
Andy, I apologize to interrupt. It just the treasury bonds, safety in the same sentence. It made me just, but continue.
Well, there once was a time when they were considered the safest investment in the world, and so the theory then being, with interest rates at zero, or in fact, when factored against inflation, negative, there is no opportunity cost or negative utility in buying precious metals. The price should be higher. So for many years, the goal of the Western central banks was not to hold the price down just for the hell of it. It was being held down to create a perception that the dollar strength and the low interest rates were justified, that the canary in the mine shaft was not allowed to sing, and that was the rising price of gold and silver. So they stepped on the canary for a very long time. At some point, and I would argue 2007, 2008, the narrative changed, and I would argue the Chinese banks got involved. After 2001 and 9/11 and Afghanistan and Iraq and all of the things subsequently that happened, the motivation changed. The motivation went from Gibson's paradox, protecting of the illusion of the dollar strength and the low interest rates, to someone was trying to corner all the metal. And so I guess the bottom line is simply this, is that why do they spend so much time and effort driving down the price so blatantly? Where are the regulators right now when you see a year and a half worth of global mine supply dumped on the market? Where the hell are they? It's crazy. It's got to be very important to the powers that be. The fine against JP Morgan was ridiculous in the scope of things. Yeah, it was deferred and they have to sit on the sidelines. So what? $920 million fine. So what? They make that in a week. It's ridiculous. And so, it's important to someone for something. Someone's trying to accumulate it. Well, take a step back. Who would it be? Well, it's either the U.S. government or the Chinese government. Why? I mean, it's an asset that you need. There's 500 ounces in the tip of every Tomahawk cruise missile. There's indispensable amounts in all of the batteries that are being used for, the ever-growing electric vehicle market, for solar and Biden's Green New Deal, and on and on and on. And it's indispensable, and it's a depleting asset. Keith Neumeyer is publicly saying that what's coming out of the ground is 8-1, yet it's priced at 78-1. Where is the disconnection? How long can something trade at 78-1 when it's coming out of the ground at 8-1? At what point does that ratio, the mining ratio, forget every other ratio, the gold to silver, all of it, forget it. Look at the mining ratio. That's all you got to look at. If the industry is pulling it out at 8-1 and it's priced at 78-1, I mean, my goodness, could you ask for a better value? So someone realizes, someone very important, some entities realize this, and someone's cornering the market, someone's buying it up, someone's holding down the price. What used to be for management of the Western currencies and the world reserve currency and the illusion of dollar supremacy and keeping everyone happy and fat, making loans and using currency, has now changed motivation to get it while it's available, because it's coming out of the ground at the lowest levels ever, and it's a depleted resource that is ever more needed for everything from medical to military and everything in between, and including Biden's Green New World. So, yeah, Chris, I think we're right. I think that things take a lot longer to play out than we would otherwise think. But I think we're right. And I think there are people that are pulling the strings that realize that, or the penalty and the flat out fines and jail time and all this stuff, JP Morgan should have been 10 times what it was for the things that they did. And in particular, when you get former Fed governor telling you this, admitting it to it, CFTC governor admitting to it, well, I mean, it's almost insulting to us all. So sometimes in life you have to have strong fingertips and hang on and trust your gut, because we are right, Chris. Probabilities aside, I think we are right, just no matter how it all plays out and when.
Well, I hear you. Makes sense to me, and appreciate you sharing your thoughts again this week. And for folks who may be interested in buying or selling physical precious metals, platinum and palladium in there too. I actually was buying a share of a platinum and palladium explorer, Valor Metals, with my homie Jim Peterson. I was fishing for some shares there. But, so for people that are into all of the metals, can you let them know how they can contact you, and if we have any specials this week?
Yeah, we're going to still run with the maple leafs in sealed boxes and tubes for $349 over spot. We had a nice position of those. We're going to continue to offer those. Of course, people can reach us at Arcadia at Miles Franklin. And if they have questions for me directly, info@Miles Franklin. Happy to answer those emails as well. I would like to just send out one clarification from last week, Chris, something that I felt a little bad about. In listening to our interview, I realized that I mistakenly referenced the name of a company up here in Minneapolis. I was thinking of a different company. I made an improper reference. I felt bad the minute I heard it. I had made a statement about the gold guys up here in Minneapolis paying 55% for gold and silver scrap, and I was wrong. They're a good company, a good bunch of guys. I was thinking about a different company. Don't even know why I mentioned the name altogether. In the heat of the discussion, sometimes in the middle of one of my rants, I can go down the road and not even remember I said something. But in retrospect, I was wrong. It wasn't the gold guys. I was thinking of a different company, not even going to mention their name. Just let it go. But I did want to send a shout out and an apology to my friends, the gold guys here in Minneapolis, and just leave it at that.
Well, I appreciate that, Andy. I'm sure they appreciate that too. And perhaps folks at home, after you're done emailing Arcadia at milesfranklin.com, you can hit the share button so that anyone who may know that business can hear this interview and spread the word. Andy, do you like the segue that I just weaved in there? Did you catch what I did? I thought it was
that was fantastic, Chris. Absolutely. You're a very clever guy. It's what I love about you, amongst many other things, including opening my eyes to so many things these days. So for what it's worth, I love being here, Chris, and always here for you and your listeners. Wish you all a great holiday season. I'll look forward to catching back up with you here, hopefully next week, Thursday or Wednesday.
Well, thank you, sir. Folks at home, hit the subscribe button, hit the notification bell, and then I'm a little biased, I'll admit it, but I think you'll want to hear what Andrew McGuire said in this week's call, which is coming your way now.